Commodities are the most tangible of tradable assets. Currencies and shares represent wealth and ownership. Contracts and options rely on their underlying assets. But commodities are real. They're as real as a nugget of gold, a barbecued steak, or a barrel of oil. Alongside currencies, they're also more transparent than, say, shares. You can read the news and you'll know immediately who's holding back production, who's trying to corner the market. While shares, well, you're not always going to be admitted into those backroom consultations before a stock split or an IPO. But what is a commodity? Well, to be a commodity, a product must fulfill a physical need. It must be standardized, and it needs to be fungible, meaning that one unit of the product can be interchanged with another. Coffee, for example, is traded in New York and Chicago, one of the oldest commodities exchanges in the world. The contract size is 17 metric tons. That's 17,000 kilos, or about 27,000 pounds of coffee. And it has to be of a specific grade and source. Gold has to be 24 karat. That's its purity. And oil is either the heavier blend from the North Sea's Brent region or West Texas Intermediate from the U.S., a lighter blend. Now, commodities come in four main groups. Metals, which include gold and copper. Livestock, which includes meats. Agricultural commodities, which include everything else. And energy, by which we mean primarily oil, gasoline, and natural gas. We also divide commodities into hard, natural resources that are extracted from the Earth's surface, and soft, which is everything else. Now, the best thing about commodities is that we're not limited to our own time zone. We can trade them whenever a commodities market is open anywhere around the world. And because we're trading derivatives and not the asset itself, we can invest in that product's value rising or falling. The next class is on shares.